Hello guys, welcome back to my YouTube channel. In today's episode, I want to show you the 2 patterns you ever need to become a successful trader trading the order block strategy. Many years ago when I first started trading, I had this misconception that a trader needed multiple strategies to be able to make money in this business. How wrong was I? It cost me a lot to later discover or realize that a trader just needed one profitable trading strategy that will give him an edge in the market to be able to make good money in this business. So in this episode, I want to present to you the 2 patterns you ever need to become an ATM in the Forex market. But before we go into our discussion, let me thank all you guys out there who have subscribed to our YouTube channel. And for guys out there who are yet to do so, please consider smashing the subscribe button and the notification bell so that each time we make a new video like this, you'll be notified about it. And if you like the content of this video, please like, comment and share with your friends. It takes a lot for us to make this video. Please encourage us by hitting the subscribe button and the notification bell. All right, having said that, let's go straight into our discussion. The 2 patterns you need to become profitable in Forex trading. Now, take a look at these patterns and train your eyes to see them. Train your eyes to see them on your live chart, so that when they appear on your live chart, your business as a trader, once you see this pattern and confirm it with other conferences, your duty as a trader is to pull the trigger and take the trade without hesitation. So I want you to train your eyes to see these patterns. Now, the first pattern here to my left, look at it. Price rallied up and created a high, and then created a higher low, and price went ahead to break the structural high here to form a higher high. Immediately after that, price collapsed aggressively, closing below the previous structural low. Now what happened here? If price was to continue with the uptrend, why did it suddenly make a U-turn and crash down to the extent that it closed below the previous swing low? Well, what happened here is what is known as liquidity grab. The Forex market is driven by liquidity. The algorithm that drives the market is so designed to seek out for liquidity. And if you don't understand the concept of liquidity, please, it is not time for you to trade just yet. You need to understand the concept of liquidity fully for you to be able to trade the Forex market successfully. Now, liquidity lies above every old high and below every old low. Liquidity also lies above equal highs, equal lows, triple tops, triple bottoms, and think of these kind of structures that the retail traders have been taught to trade with. We do not trade support and resistance, but we take advantage of support and resistance to frame our setups, to take our trades. Now, market makers drive price. They know that there is liquidity resting above this old high here. So they took price up, they dropped price up to capture all the liquidity there, because retail traders who saw a violation of this old low believed that price was going to continue to rally up, and so they placed their buy orders and entered the market. Where do you think their stop losses will be? Below this old low, of course. And market maker understands that. They push price up as if it was going to continue rallying, only for them to drop price aggressively downward to close below this previous low and capture all the orders, all the stop losses resting below these lows. Now, the idea why this pattern works very well is this. Because retail traders have been trapped here when they place their long position and price collapse down to take out their stop losses. The remaining traders that are here that have been trapped, market makers will not want to move price back up there to close above this high. If they do that, then the trapped traders here will be released, and the market makers will not want that to happen. So the expectation is that after the grab of liquidity, price will continue for a while before coming back to that zone. So please take note of this first pattern very well. In this first pattern is liquidity grab. Liquidity grab. And I call it pump and dump pattern. Pump and dump pattern. Now, the second pattern does not grab liquidity, but it created a high here, came back to create a higher low. The expectation would have been that since it has created a low, a higher low, price will go ahead to break this structural high here to form a higher high. But price didn't do that. Price rather printed a lower high and started dropping aggressively to the downside. Now, I need you to train your eyes, guys, to see these patterns. Please, train your eyes to see this pattern. These patterns that you are seeing, these two patterns, they are your money pot. These two patterns, these are sell model patterns. For the buy model pattern, it's just a flip of the sell model pattern. So we go right now into our chart to see some examples. Let's see some examples. Let's see some examples. GBPUSD. Let's see some examples there. What happened there? GBPUSD. GBPUSD. Let's see some examples. Now, take a look at this. GBPUSD. What happened here? Now, price made a high and came down and made a low, made a lower high and made a lower low. This is our last low. Look at where my cursor is. This is our last low. Price came to violate this previous low here to close below it with only one candle. Look at it. It closed below it with only one candle. Remember, I told you two patterns. One is liquidity grab. The other one is shift in market structure. Look at this. Price came down. Market makers grab liquidity here with this one red candle. Immediately after they grab liquidity, price rallied up to break the structure here. Look at the structure here. The purple horizontal line. It broke the structure there to go up. Now, this red candle becomes our order block. This red candle, this is our order block. It's a high probability order block. Why? Because liquidity has already been captured and traders have been trapped here. Retail traders have been trapped here. And market makers will not want to bring price down below this old low. Otherwise, the trapped traders here will be released. And the market makers will not want that to happen. So when market came back to that OB, the high probability OB, market makers mitigated out of their position because when they sell to buy, they were in drawdown as price rallied up. So they came back down to mitigate out of their position, and look at how price now exploded up very, very aggressively. That's the first example. Let's look at another example. Let's look at another example. Let's look at gold. Let's look at gold. Look at gold. Let's go to daily chart. Let's go to the daily time frame. Look at gold. Gold here made a high here. Look at it, made a high, a lower high. I mean a lower low, lower high, lower low. And look at what happened here. Look at what happened here, where we mark this our OB. Look at what happened. price started going sideways. You may not be able to see it very well here, but let's get to the 4 hour and let me show you what I want to show you. Now look at 4 hour. Price came here and started consolidating. What happened here is what ICT calls the power of 3. What is the power of 3? Accumulation, manipulation, and distribution. This is the power of 3. Now, market makers created these highs here and created these lows here. What do you think is resting above these highs? Is liquidity, money, pending orders. Imagine how many traders would have seen the top of this consolidation as a strong resistance, and the price cannot break through it. And then they will place their sell orders here because they have been taught to sell at resistance and buy at support. So they will place their sell orders here. And where do you think their stop losses will be when they place their sell orders here? Of course, above this high. Perhaps, maybe, I don't know, 5 pips, 10 pips above. They will place their stop losses there. And then, there are traders who also will see this, that this is a strong resistance. If price breaks out of that place, then they will place their buy orders. And price broke out of there and breakout traders jump in. Where do you think they will place their stop loss? Of course, below these lows here. And below these lows, there are traders who see this as strong support, and the price cannot break through the support. So they place their buy orders here. Where do you think they will place their stop losses? Below these lows. They will place their stop losses. And look at what market makers did. They drove price up as if they were going to go up. As if price was going to rally up. They pushed price up to capture all the liquidity here, and aggressively they brought price down to also capture the liquidity below this consolidation market, and they carry on the market down. Now, let's go back to our daily time frame. Look at this order block, because it has already captured liquidity, becomes high probability order block. Because liquidity has already been taken, market makers will not want to bring price up to close above this order block. Otherwise, the trap traders here would have been released. So when price came back to this OB, it dropped aggressively. Let me just show you in 1 hour where we entered the trade. Where we entered the trade. Take a look at it. Look at our 1 hour. Price. This gray box here is our daily POI. So price respected our daily POI and dropped down to close below these lows here. When price closed below these lows here, this blue candle here is our order block. This blue candle. If you mark out that blue candle, and wait, when price broke this structural low here, price now went back up to mitigate out of this order block, and look at how price dropped aggressively. This is where we took our trade from. I didn't see the 1 hour order block. I was busy doing some other things. One of our group members drew my attention to it, and so price dropped aggressively. I want you to really understand this. Train your eyes to see these patterns on your chart. Very, very important. Let's see if we can make one other example. Let's see. Now, I want you to take a look at this again. Let's go to the 4 hours. I had to mark out all these things so that it can save us time. It can save us time. Look at what happened here in USDJPY. I told you there are 2 patterns. One, liquidity grab, and the second one is the shift in market structure. I've shown you the examples of liquidity grab. Now take a look at this. This is a shift in market structure. Price rallied to this point and created a higher low. but failed to create a higher high. Instead, it created a lower high, and price went down to break our structure. Look at this red horizontal line. That is our structure break there. When price broke the structure, where is our OB? Our OB is this last blue candle here before the break of structure. And when price rallied back up, price reacted to that OB and dropped aggressively. Look at the way price dropped aggressively. Look at it, the way it dropped aggressively. So guys, all I want you to train your eyes to see are these two patterns. Please train your eyes to master these two patterns. And when you find these two patterns on your live chart and they meet all your trading conditions, don't hesitate. Your duty as a trader is to pull the trigger and take the trade without any hesitation. Once the setup has met all your trading conditions. These two patterns are your money pots. Please take note of that. Don't take my words for it. Go back to back test. Don't take my words for it at all. Go back and back test and see how effective these two patterns are. Right, guys, before we draw the curtain on this video, one more thing, guys, please consider to smash the subscribe button and the notification bell. And if you like the content of this video, please like, comment and share with your friends. In so doing, you will encourage us to produce more educational videos like this. Thank you very much.